They came, they met, they said they would raise oil production, that is, but not as much as expected. The 14 member nations of OPEC agreed to increase crude oil output by what works out to be about 600,000 barrels per day. But 2 years ago, OPEC cut output by 1.8 million barrels per day to stabilize falling prices. So we're not coming back really that much. And there's no firm promise of the 600,000 truly being cut. That's why oil prices, which would normally fall on increased supply, are jumping right now. Even in the aftermarket, this is a big gain on any given day, up 5.5%. What are U.S. producers doing in reaction? They're still pumping. The Baker Hughes rig count revealed that active oil drilling rigs fell by just one from last week. We still see the highest number of rigs pumping at a 3-year high. Chris Wright is the chairman and CEO of Liberty Oilfield Services. This is a pure play fracker. Chris, the markets do not believe anything OPEC has said over the past 24 hours. Not only didn't the promise of 600,000 more barrels per day, I guess, bring down the price jumped. How are you interpreting what's happening?
Well, Liz, I think it jumped because of the structure of the deal, not so much the announced number, but the structure where each country can only pro rata increase their production, and the majority of them can't increase their production at all.
Okay, I get that because some of these countries in OPEC have had outages, problems, a few explosions. It happens with this technical equipment. But let's bring it home. I don't think you guys want more supply on the markets. You like the higher prices, right?
Sure, but sure, higher prices are better for folks in the business, but it's a balance. I think there is a risk, a non-trivial risk, of oil prices really spiking in the next 12 months. I think Saudi wants to prevent that. I think for our industry, it's good to prevent that. You know, demand is growing fast. The developing world's getting wealthy, and demand for oil is growing very quickly right now.
I want to whip through some of the drillers. You're up about 2%. Transocean jumping more than 7% earlier. You've got Ensco up 8%. Diamond Offshore is spiking as well. We've got Noble Drilling up 9.75%. Granted, that's just a $5 stock, but nonetheless, these companies are having a great day. So I don't see too much worry. I think they love it. Don't investors and shareholders too?
Oh, I think absolutely. All those stocks you listed are the offshore drillers, and their industry's really been in a tough downturn. And yeah, maybe this signals the coming back to life of offshore drilling as well as the onshore world that we're involved in.
Let's show gasoline prices. What are people going to be paying at the pump? We have seen gasoline prices jump over the past year per gallon. The average price has been moving up, as you can see. Today, it's for regular $2.86. A year ago, it was $2.28. What can people expect as they hit the summer driving season?
It's too complicated for me to predict, but I suspect it moves up a little bit more. So as you say, gasoline prices are higher today than they were a year ago, but they were quite low a year ago. You know, they're dramatically lower than they were 4, 5, and 6 years ago. And I think that's good. I think that's good for consumers and good for our country that gas prices are relatively low.
Okay, relatively. Yeah, I don't think there's a consumer watching who thinks that higher is better than lower, but we'll be watching it. Thank you so much. It's great to see you.